Welcome back everybody. So this is gonna be a quick update video for you guys on stock market, and before we get started, please smash that like button, and 100 plus likes on this video would be greatly appreciated guys. And if you're new here, consider subscribing. Now if you want to get my daily trade ideas, swing trade ideas, live trading, and you want to support the channel, definitely check out their link down below in the description for Patreon. Now, what we got here on stock market on Friday? Well, it was a Labor Day weekend, so obviously market it's not going to sell off. So we rallied into closing. Dow is up 0.55%, Nasdaq going up 1.13%, S&P going up over 1%, and Russell also going up just over 0.5%. And here's 11 sectors that makes up S&P 500. On top, we got consumer cyclical, technology, industrials, financial, real estate, so completely at risk on move here in the market. On bottom, we got energy, basic materials, and pretty much everything in green on Friday. And what we have here on stock market map, we got Amazon going up almost 4%, Tesla up almost 4%, also Meta up just over 0.5%, Google also going in the green 1%, Eli Lilly, the big stock from healthcare, also going up over 2%, J&J, MRK, all are up, even Pfizer. Then we got Apple actually lagging behind, down 0.34%, Microsoft going up into closing almost 1%, and Nvidia finally going up again. Even after that drop on earnings, this stock would not stay down, came back up over 1.5%. We got big banks, JPM, Wells Fargo, Bank of America, and pretty much all the regional banks are also going up on Friday. So big rally into closing, and we'll see how that actually affects next week, because we have some data and I'm going to share with you guys in this video. So we have some key data coming out this week, and that's going to move the market. We don't have any big earnings, but ISM on Tuesday, I don't think that's going to cause this market to go crazy. But then we have on Wednesday, Joel's job opening right here. And then this is not only the main thing, we have non-farm and then initial jobless claims right here. But I think this data right here, guys, is going to move the market. We will see if the market is actually expecting a recession after this unemployment data that comes out, and that is coming out on Friday. So yes, this is gonna be a week where you're going to see lots of volatility, even though we got only 4 trading days next week. Happy Labor Day everybody. So I do have a special for you guys on this Labor Day, starting right now up until Labor Day midnight 12 a.m. Annual membership Premium Plus for 1 year. It's gonna be only $500. This is not a monthly payment. There is no option on Patreon to do one-time payment. So it says monthly, but you're going to get charged for only $500 one time for 1 year. And you get access to this tier right here, which actually costs $100 per month. That is like $1,200, and you're getting it for only $500. So 70% off. And you are really serious about trading and you want to join, this is the time to join right now. So another thing I want to show you guys, so we've been chopping in this box for almost 2 weeks now, and into closing on Friday we do have this hammer style candle. But I want to show you guys a full measured move here on SPY right here. If we actually break out of this range starting Tuesday, this thing can fly easily up to not only 565, easily up to I would say 573 to 574. You just put this box on top and you'll see that is the target next week. Now we get under this level, under this box, this bottom right here, then watch out, we might be coming back and filling this gap right here at 545. So really important to see what the market does next week. If we actually break out to the upside, or maybe we see a breakdown below this range, and if it's chopping in between, then it's going to be really hard to trade this market going into next week. On SPY ETF, it's up almost 1%, and if you look at my screen, just like I said, hammer type candle into closing, we actually closed at high of the day, so that is looking bullish. Bollinger Band here on top expanded up to almost 580. So that is also looking bullish. All we need here, if bulls are going to press even higher, we need to break out of this range completely For that, I would say it's safe to get over previous all-time highs, which is only like, $1-2 away. 565. If that can happen, SPY can hold 565 as a support, then like I said, and I did show you guys that chart, we can easily get up to that range. That's going to be 574 to even 580. So these are upside target for next week. Now, we break down below this range, and you can see this 557 to 556 level so far holding. If we can crack under that level, and I think with some higher unemployment number, that can happen. And if that happens, we get under 557 right here, you're going to see a flush down to 549 50-day moving average, and then this gap comes into play. And I did show you guys that box, and that is where we can actually hold, and this could be a buying opportunity as long as the support holds. Now, if you're playing this to the upside, well, only thing I got to say, we have to look at QQQ and see what the market is exactly doing right now and why it's not actually really safe to go and hold long-term positions right here at all-time highs or near all-time highs. It's better to just day trade, lock in your profit, and play day by day instead of going long here at this level here on SPY ETF. On QQQ, it's up over 1%. So here on QQQ, this is actually a massive lower high right here. You can see this high, and we actually never got over this bearish engulfing candle where SPY ETF actually did. So technically, it's not really all too bullish here on Qs. And usually you want to see Qs leading the way. And in this case, we're seeing that Dow Jones leading the way, and then also S&P 500. So if you're really bullish on Qs, we need to get over, I would say, 485-ish. That is the key line here that we need to break. Over that, this gap easily. You can play this, you can swing this, you can do whatever you want to do, but play it to the upside over 485 on Qs. You're going to see this gap getting filled at 493. Longer time we spend under 485, this is actually a massive lower high on daily, even weekly. And now, if this thing cannot get over right here, 478, and can hold this 50-day moving average, which is holding into closing 474, we might see a drop down to 465, which is in line with this rising 20-day moving average, gap fill reversal, and this is where we can actually find a lot of buyers as long as the support holds. If not, the next support at 460. So you can see Qs not really following the market. We're definitely not breaking out to a new all-time high. So that is not too bullish going into next week. Risk on sector, which is Nasdaq 100, a lot of risky assets right here. And this one definitely nowhere near even this high, which is 485. So be cautious, be careful trading in this range, and especially if Qs are not going over 485, we might see that pullback coming into this market very soon. On Dow Jones, it's up 0.5% and closing at a brand new all-time high and looking extremely bullish going into next week. Now, two things I want to point out. Dow Transport, we're not going higher. Here in this case, Dow Jones going up even higher and closing over previous all-time highs, 414. That is technically bullish, but if you look at my screen, many times market likes to do those fake outs. Now, how do we confirm that? Well, it needs to stay over 414 for this bull run to continue up to this target to the upside, 420 to 422 for next week. The moment we take out 414, this thing will come back down to 411, and under 411, well, before 411, we have actually this support right here, 413.41 rising 5-day moving average, and then 411, 409.67 13-day moving average, and then all the way down here at 405, and then this gap comes into play at 400. So if this is a fake breakout, we will see that next week getting under and closing under previous all-time highs, 414. Now, if this is actually the real deal and we got the breakout, then we need to stay over 414, and the longer time we spend here on Dow Jones over 414, this thing can push all the way up to 420 and then 422. On IWM, it's up 0.5%, and you can see this one also not actually coming down that much since this bottom right here. And so far into closing, I mean, look at this closing here, closing over 220, technically staying over 5-day moving average. So the longer time we spend over 220, there is a huge possibility IWM can actually move higher up to this 225 level, and over that a lot of people are talking about breakout and all that. Well, until I would say this thing clears 225, holds for maybe 1 week, then we can talk about brand new all-time high and possibly going up and retesting previous all-time highs. Not until then. Now, if this is actually some sort of a fake rally because of that rate cut which is coming this month, usually those are not bullish. Until rate cuts are done, then the market bottoms. In that case, the rate cut is coming this month, at least I think 0.25%. And if that happens and the market realizes with job numbers and unemployment that yes, we might be going in a recession, it could be a really bad recession, maybe a mild recession, we don't know yet, nobody knows anything. But the question remains, why Powell cutting rates now? And it can happen, guys. It's barely, like, it never happened. That they are talking about soft landing and we're just gonna soft land without causing any issues. So something inside is already broken. We're not gonna know. It was just like inflation. It was high and he said, well, it's gonna go away, everything is fine. And then what happened? He came out and started raising rates. And now he's saying like soft landing is here. We see the data, inflation coming down, and we're just gonna cut rates and slowly. I mean, it's the time. Time has come, right? That was a new dialogue from that new press conference. So the time has come for what? Rate cuts cause more pain because this rate hiking cycle causing a lot of issues for a lot of companies, a lot of banks blowing up. We don't know what's blowing up behind the scenes because we don't have those informations. They have it. Powell has it. The government, they know what's coming. We don't know. These people plan ahead. They know what's coming. So if there is actually a rate cut coming, which he signaled already, then I would be careful buying and going long here on small caps. If this thing breaks 220 to 219 going into Tuesday's session, you're going to see a drop down to 216, and underneath that level we might see a drop down to even 211 right here, which was that breakout point. And then we also have this gap down here at 208.75. so going long on IWM, careful until we can confirm that breakout actually happened. And you can see this was a fake breakout also. What happened? A lot of people went bull right here, like, oh, it's going to all-time highs, and then boom, 196, right? It can happen again. Now we're getting closer to that level until we get that breakout, and breakout means staying over that level for at least few days. And you can see even 2 weeks staying over that level did not help. We flushed all the way back down to 196. So be careful, especially thinking about going long at this point. You can day trade, you lock in your profit and you go about your day, and you don't come back and try to open a swing here at 225 and thinking about all-time highs without a confirmation breakout on IWM. On VIX is down 4% and it's holding that $15 support. So VIX here, guys, it needs to hold that 15 bucks. If not, we might be getting back down to this range where this thing trades around $13 to $12. And you can see it actually came down to even 10.62. So VIX needs to hold 15. We need that breakout. We saw that even on Friday. We need to get over 18 bucks. If that happens, this thing can spike back up to 20s again. And in that case, we'll have a short-term top in this market and some, pullback that's going to happen on market. And then VIX can rise up to 20, even 20 plus, depending on all those data that is coming out next week. So careful, especially watch this thing right here, where this thing can actually hold 15. And if this thing gets under 15, yeah, market will rally up to a brand new all-time high. and it might stay there for a little bit. So watch out. I mean, VIX definitely signaling that we might go up to all-time high, but these data that are coming out, guys, these are key data coming out this week, and that can cause a lot of volatility here in this market. Now, dollar, you can see that's another warning signal for the bulls, people that are buying, near all-time highs or at brand new all-time highs and thinking about going long. Look at this, bottom, 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 and what do we got here? I'm not saying this is the bottom, but we have a green candle, right? That is technically bullish. It's a bullish engulfing candle. If we can push through 102.61, and that what's interesting here, that dollar was actually up on Friday, where we saw S&P 500 rallying and closing pretty much at a brand new all-time high or near all-time highs, only few bucks away from all-time highs. So dollar rising, we got VIX going down, S&P rising. It does not really add up, right? Dollar should be going down even more, where in this case, this might be a bottoming process. And we talked about it before, that $100 right here on dollar, that is a strong level for a bounce. And we got that, and now it's trading near 102 almost. So we might see more upside here on dollar. And if that happens, and this move that actually happened on Friday, that can actually cause a lot of pain for the market going into upcoming trading week, which is next week, right after Labor Day. And that's all I have for you guys in this video. Thank you so much for watching, guys.